We went through we started to see the benefits of our diversified business model, our global reach, the fact that we are bringing together faster than expected UBS and Credit Suisse capabilities. On the other hand, we had also a market environment that was challenging, but also offered opportunities for investors to position themselves. So I think it's a good mix of factors.
Can you replicate this going forward, given that the equity markets had such a good run also in the last quarter? A little bit of volatility was in there as well. So what's the outlook for the fourth quarter?
Well, look, the outlook for the fourth quarter is clearly still somehow influenced by the uncertainties we see on the macroeconomic and geopolitical front. We have the upcoming elections in the U.S., which, of course, is not going to be an uneventful event. So we do expect, no matter who wins and the outcome, we do expect some market movements, and it remains to be seen how investors will react. We have also to remember that the fourth quarter is also affected by seasonality factors.
How do you position yourself ahead of this all-important election in the U.S.?
Well, look, we just look at, we stay close to clients, we help them navigate these uncertainties, and from a bank standpoint of view, we are well positioned to navigate any environment. So we have a very strong capital, a very strong balance sheet position that allow us to stay close to clients and do the best.
You have a very large footprint in the U.S., and whoever wins, one thing is clear, the debt will rise in the United States, so government debt. Is that a concern to you when it comes to the stability of the U.S.?
Well, generally speaking, it's our concerns that public debt and the government debt is increasing all over in the world, so it's not just a U.S. specific matter. I believe that we will have to analyze the situation exactly when it comes, and I do not really expect any major change immediately, but it's going to play out over time.
Interest rates are still quite high, even though they are on a downward trajectory. And how much of your profit growth as well depends on an elevated level of interest rates?
Very little. So, I mean, relatively speaking, definitely with other banks and banking models, we have only 20% of our revenues are coming from net interest income. And actually, when we see rates coming down, we see clients, in some cases, taking on more leverage, so against their position. So I think that we have almost an offsetting factors. Having said that, lower rates in the foreseeable future will have still a little bit of an impact on our profits, but it will be offset by, as I said, transaction volumes and fee-based businesses.